Today we're going to talk about the housing market and the changes that just came in. This news that has came in is pretty hot. It's by Redfin.com itself, and Redfin is pretty good at aggregating data for the housing market. So we're going to dive into some very key metrics and get a feel, get a touch, get a idea of what's going on in the market, what's been going on this year, and most importantly, where these numbers and these metrics tell us where it's gonna go. So let's dive in. Be sure to hit the like, hit the subscribe. Let's go. So housing market update, lurching mortgage rates spook home buyers. Check this out. Home buyers have lost 29% of their purchasing power since rates bottomed out in early 2021. As we get into these numbers here, you'll want to see them. You will see what this 29% really means, because just getting that number doesn't quite show what it really means. So let's dive in a little deeper. Mortgage rates shot up to a 15-year high. So this is the highest they've been since 2007. Home tours fell 7% and mortgage purchase applications declined 13%. So that indicates a decrease in demand, both in applying for mortgages and going out and seeing houses to actually buy homes. Are those numbers huge? No, the applications number is certainly bigger than the tours one, but let's go deeper. Let's not make any hard decisions yet. Home buyers, again, have lost 29% of their purchasing power as the average 30-year fixed mortgage rate climbed from 2.65% at the start of 2021 to 666 today. This article is actually a little old, a few days old. The rates have actually gone up higher than 666. They're closer to 7 right now. As a matter of fact, here I'm on Bank of America. Here's the rate. Here's the APR after all the other fees. So it is over 7%. Important to realize. Keep listening. You're going to want to see this. If you're interested in buying a home, or if you're thinking about selling a home, anything like that, you're going to need to know this stuff. You're going to need the information, the data that tells you the truth, not what your neighbor tells you, not what your buddy tells you. You're going to need to hear the truth and see what's really going on. Now, as we go through here, I think you'll get a good snapshot of what's going on in the actual market. So think about that. 2.65%. That's like the lowest of all time. What a deal. That obviously made people want to go buy houses even more, because the interest rate is basically nothing. Okay, so that's important. Now, let's look at this chart. This is a powerful chart. 29% in purchasing power. So this really shows more of what that really means. So what we're looking at here is a home price afforded budget of $2,500 a month. This chart shows what kind of purchase price you could get on a house and expect to have a $2,500 a month mortgage payment. Back here in 2015-16, you could get about a $500,000 house. Then rates went up some. So in 2019, you could get just under a $450,000 house and expect to pay $2,900 a month. Then in 21, we hit that top in the early part of the year when the interest rates were 2.65%. You could get about a $534,000 home. Now, with the interest rates, as you can see, interest rates, there's an inverse relationship. As interest rates go down, that's the blue line, you see the price of the house go up, obviously, because it's literally numbers. As it went way down here into sub 3%, you see that was the top, and now interest rates have just went parabolic. Look at what's happened to what you can afford. Now, at $2,500 a month, you can only afford a $379,000 house, from $534 to $379. That is what 29% looks like. Let's keep going. Just hit the like, hit the follow if you find this useful so far. Sellers, so this is from the Redfin Deputy Chief Economist, Taylor Marr. And bear in mind, Redfin, this is not good for Redfin. They are a real estate company, and they're giving these numbers. Odds are, in my opinion, these numbers might be even worse than they are putting here. Sellers are pulling back in this market, but buyers are pulling back even more. Let's go through some more data here. Searches during the week ending October 1st were down 33% from a year earlier in terms of homes for sale on Google. Redfin Home Buyer Index, a measure of request of home tours and other home buying services for Redfin agents, big metric to look at, declined 10% in the past 3 weeks to its lowest point since the week ending June 19. The index is actually down 26% year over year and fell below the same time in 2020, which is, of course, when the pandemic kicked in and everything got shut down, including real estate. Couldn't buy real estate for a while. Touring activity down 26% from the start of the year. Hear this. Compared to an 8% increase at the same time last year. So, in reality, what they're trying to avoid saying there is that touring activity year over year is actually down more like 35%. That says something. Purchase applications are down 37% from a year earlier, almost exactly matching the touring activity. But 26 plus 8 is 34. How do you get 35? It's actually probably closer to 40 because the number up here at 8% increase is a bigger percentage. So it's probably actually closer to 40%. So stay with me. You want to hear more. Key housing market takeaways from 400 U.S. metro areas. So this is going to give us a good view of what's going on across the entire country. Now, each market can definitely be specifically different. Some markets are going to get hit way harder than others. Some are actually still going up. But this is the average across the entire country. That's what they're doing here with these 400 U.S. metro areas. So let's dive in. The median home sale price was $367,652, up 7% year over year. That's positive. But places like San Francisco fell 1.4% year over year. Oakland fell 3.4%. New Orleans down 9%. And they said that those were really the only other metro areas that went down. Interesting. Median asking price of newly listed homes increased 9% year over year to $383. Interesting. So that would be positive too in terms of housing going up. But not all numbers are in a vacuum. Hit the like, hit the follow, keep listening to this. You're going to want to see this. Monthly mortgage payment on the median asking price home climbed to a record $2,528 at the current Beast 666 mortgage rate. So it's actually even higher now because you saw mortgage rates are more like 7% at the time of me recording this. Up a whopping 49% when mortgage rates were 2.99% a year earlier. Wow. That has an effect on demand. You cannot deny that. I cannot deny that. Nobody can deny that. When the price of something goes up so much, so fast, but the housing prices are the same. No. The monthly payment for the house and the overall amount of money you're going to pay for the house by the time that loan is over basically went up a good 50% is what they're saying here. Interesting. Pending home sales are down 25% year over year, the largest decline since May 2020, which was, of course, you couldn't really buy houses because of the pandemic. New listings of homes for sale were down 18% from a year earlier. So that means supply is also down. So supply is down and demand is down, and that helps with the prices of the home. If demand is dropping, prices are going to drop. But if supply goes down too, that helps. So what do we think so far? Let's go further. Too early to tell. Active listings fell 1% from the prior 4-week period. On a year-over-year basis, they rose 3%. So that's the number of active listings. Interesting. Months of supply. Okay, so this is where the rubber's starting to meet the road here. A measure of the balance between supply and demand calculated by dividing the number of active listings by closed sales increased to 3 months, the highest level since July 2020. You don't want that number to increase if you want housing prices to go up. If you want housing prices to go down, you do want that number to go up. Where do you sit? Leave a comment. 35% of homes that went under contract had an accepted offer within the first 2 weeks, but that's down from 40% a year earlier. So a little bit. 24% of homes that went under contract had an accepted offer within 1 week, down from 28% last year. Homes that sold were on the market for a median of 32 days, up a full week from 25 days a year earlier. So what we're seeing is demand is dropping, supply is dropping, and the amount of time on the market seems to be increasing nationwide. Again, market specific could be worse, could be better, but nationwide on average, this is what's going on. 31% of homes sold above list price, down from 45% a year earlier. So way less homes, about 33% less, are selling above asking price. That's a big drop, okay? But that doesn't necessarily have to make things bad. Lowest level since February 2021, when, of course, the mortgage rates were at basically their lowest. On average, 7.7% of homes for sale each week had a price drop, a record high, up from 3.9% a year earlier, a price drop. So that tells me that prices, at least expectations when houses get listed on the market, are coming down in value, okay? Because that's why they're listing them too high. They're sitting on the market longer. There seems to be less supply, but there's probably even more, less demand. And more houses are having to do price drops, almost twice as many as last year. 3.9 times 2 is 7.8, pretty close. The average sale to list price ratio, which measures how close homes are to selling to their asking prices, fell to 99.1% from 100.7% a year earlier. Doesn't sound crazy, right? So even though houses are doing price drops, they're down about 1.8%. But again, housing doesn't typically go down, okay? Important to note. But we did have crazy growth, right? So when you're looking at year over year, it doesn't necessarily have to be bad. Where do I stand on all this? We're going to go through these charts. These are going to go over the numbers we just did, but show you a visualization. You'll want to see this. Hit the like, hit the follow, leave a comment. What do you think about this? I'm going to tell you my final thoughts at the end. And I've been in real estate for over a decade now. Median sales price. So not the average, the median, which is not in my opinion statistically, it's a better depiction of what's going on in the general market. Median sales price is up 7.4% year over year. Here's the 2022. We've had quite a drop from this point, right? Which was what? Sorry, my mouse. From June 2022. Quite a drop. But with that said, it's still up year over year. So this gap here, see this gap between 2020, 21, and 2022, the gap was pretty consistent from year to year, but now it's starting to close. Will it continue closing? It is starting to come up a little bit, huh? So did this. So interesting. Maybe this is just a little bit more of a drop than this one, and maybe it stays steady. Will it? I don't know. Let's look at more data. Median asking price is up 8.9% year over year. Okay, and that's at this point from October 2nd. Obviously, the median asking price was even more than that up here. But the median asking price has come down since its peak this year, which was probably about in June, from 400,000 down to 384. So that's a drop of about 4% from the peak to where we're at right here. Right here, actually, this was even lower. But that's a pretty sharp bounce. Will that continue? I don't know. Let's go further. Home buyer mortgage payments up 48.6% year over year. This one is very concerning. This is the biggest reason for a drop in demand. If you bought a house last year, you were paying X. If you bought that same house this year at the same price, you're paying X plus 48.6%. So if you were paying $1,000 for the same house at the same price last year, you're paying $1,486 this year for the same house at the same price. Look at these gaps. Okay, it went up between 2020 and 21. Look at this gap. Holy moly! Fix me up some guacamole. Wow. That's gonna. No wonder applications are down. Okay, pending sales down 25% year over year. You can see this. You see this gap maybe widening here between 21 and 20 and 22. There it's going down 25% pending sales. So that means houses, as we saw, less houses are on the market for longer. There's also less of them up for sale, so that plays a factor in pending sales. If there's less houses for sale, obviously pending sales are going to be down. But if demand is down, that's also going to bring down pending sales. So the question is, which one's bringing it down more? Both are bringing it down. Okay. Next, new listings of homes down 19% year over year. So that's that supply being down. That's a significant drop, down 19%. It really is. And you can see, visualized by the charts, you can see what's going on here. But all these went down a lot too. So this is going down, but it's going down at a faster rate than these ones. Odds are sellers do not want to sell their homes right now. Less of them do. Less of them are motivated to. We'll put it that way, because they have noticed the demand drop, and they don't want to sell right now. Even though, from what the data we're looking at, they could get more than they could get this time last year, as long as their house sells. That's something that I'm taking away from here. Active listings of home for sale up 4% year over year. So interesting. Apparently, we have more active listings of homes for sale compared to last year. How is that possible? Very interesting. Very interesting. 3.2 months of supply available on the market. So that's how many houses are on the market, calculated with the purchase rate to see how many months out, the current amount of houses for sale on the market, how long that would take to get through based on buyer demand. Up a whole month year over year based on the same time last year. And obviously 2020 was actually higher. 21 had lower months of supply than 20 did at this time, but 22 crossed them all. Interesting. And it just crossed. It crossed 21. This is important to know when they cross. Crossed 21 in May and crossed 20 in July. So where's it going to go from here? Probably. 35% of pending sales under contract within 2 weeks. So that is down from the previous 2 years. So that means that when a house gets listed for sale, 35% were under contract within 2 weeks. But that is down from the last 2 years. It is starting to curve up, though. Where these ones were going down, this is starting to curve up. Will it continue? I don't know. I don't think so. That's my opinion. Unless, of course, prices come down more, then we could expect this to go up. 24% of pending sales under contract within 1 week. Same thing, you're way down here. It's lower, but it is curving up, getting a bit of a bounce. Homes sold in a median of 32 days. Again, we've crossed 21. They were still in 20 selling, taking longer to sell, but in 21, we're certainly taking longer to sell now than we did in 21. 31% of homes sold above list price. We crossed 20 way back here in June, and now we just crossed, 21, and then 20 in September. So now, 31% of homes sold above list. So houses are going for list price or below at a more frequent rate than they have been the last 2 years, which has been a record boom in housing prices and demand. Here's a big one. 7.7% of listings had price drops. I really wanted you to see this visualization. Look at that gap. Look at that gap. And that thing does not seem to be slowing down. That's a big one. So that indicates to me that housing prices are probably coming down. Average homes sold for 99.1% of lists. We crossed 21 up here. We just crossed 20. I think that's going to come down also. Unless, of course, listing prices come down. When listing prices start coming down at a faster rate than this, then it will plateau and maybe even curve back up. Home buyer demand index, this is Redfin's own thing, down 20% year over year. Crossed 21 all the way back here, crossed 20 right here. Here we are down 20%. So this is people reaching out to Redfin about home buying services like touring and anything related with interest in buying. So that's just another indicator of demand, okay? There's Tim Ellis, he wrote it. So my overall take, what is it? Hit the like, hit the follow. My overall take is that the housing market is certainly cooling off. Oh, thanks. I always watched a 19-minute video for that. Yeah, no. I think the housing market has a lot further down to go. Interest rates are going to go higher, right? Interest rates are going to go higher, which is going to make demand go down even more until home prices come down to match. Because again, the big chart I want to show you is this. Look at that. That same $2,500 a month payment in early 21, would have got you a $534,000 home. For the entire year, would have got you a house that's worth over $500,000 for that $2,500 a month. Now we're down here. 379. Do you think prices have dropped that much to match that? No, they have not. Will they come down this far? Will they come down 29%? Some markets they will. Some markets they won't. What'll be the average across the country? My guess is at least 20, but it could get up to 30. Some markets could get up to 40 for sure. When you look at the really, really ones that got too heated, like Phoenix, apparently New Orleans is flying out of nowhere. I had no idea that that one was so overheated. Boise, maybe Nashville, Austin, Texas for sure. Maybe some places in Florida, maybe some places in Cali. I live in Seattle, maybe here. Yeah, places like that. But the Midwest and the Northeast seem to be doing okay. I think that they will be the least hit by this. So that's what I got for you. Got about a 21-minute video. I hope you found this useful. Hit the like, hit the subscribe. Going to try to bring you all kinds of market and financial and investment stuff, although none of this is financial advice. Crypto, stocks, macro, housing, investing, Airbnb, all that type of stuff. We're going to go shopping in a little bit, try to find some Airbnbs and some, we're going to do some investment shopping on some of the videos, so watch out for those. Stay classy. You're awesome.